quarter. And it's the same old story we've had for a few weeks now. The dollar is dominant. All eyes now on the Fed next Wednesday, 4th of May, key event. And the dollar is just rampant, or dominant, as I called it this morning. Here on the dollar index, let me just show you the dollar index here. Dollar index here, 103.87. This is the monthly chart as well, by the way. So this looks when we were last up here. This is the monthly chart. Sorry, it's not. It's the daily chart. The monthly chart here for dollar index. So it was 2020, the height of the panic over the pandemic, March 2020. And if we go back even further, it takes us to this high here is January 2017. So January 2017 highs, March 2022 highs. See that? See the fractal? There we go. That's why fractals are so good. Two big fractal highs there. January 2017, March 2020, and here we are, April 2022. Huge candle here for the month of April for dollar index. Remember, the dollar index is a very narrow way of measuring the strength of the dollar. There's only 6 currencies that create this weighted average, and the euro accounts for 56% of that. So along with the strength of the dollar, we got extreme weakness in the euro. The euro this morning went under the big historical 105 level here. It's the daily time frame. Again, if we got to the monthly again, and you can see if I zoom that up a bit, there you go. So this is a big down month for the euro. Obviously, the situation, the war in Ukraine is not helping the euro situation anyway, but we've got this massive, not massive disparity, but we've got disparity between the rate of change of the key central banks. The Fed have obviously targeted and said they are moving at least 50 basis points next week. It could be 75 basis points. 50 basis points in the 2 following months, in the 2 following meetings as well, possibly. So again, see how it all pans out. But basically, it's a dollar strength story. So as far as the euro is concerned, we've been under 105 this morning, and that takes us back to, again, January 2017 lows here for the euro. Below that, on a support basis, is about 103.40. You can see this. See this candle here, the monthly candle here, takes us down to 103.40 range, the next level. And obviously, when we're down here, it starts, analysts and pundits start talking about parity for the euro. We didn't get down there last time. Will we get down there this time? Who knows? A lot of it, the court is now held by Ms. Lagarde and her team at the ECB. Are they going to support the euro? But obviously, a lot of the pressure on the euro is outside of their direct control, simply because the war in Ukraine is such an unknown. And then obviously the other situation that's weighing on all currencies is the persistent lockdowns in China. So on the upside, we just need a little bit of positive news out of China, a little bit of positive news about the war in Ukraine, and things could turn around quite quickly as well. But at the moment, euro's down, dollar's rampant, and the other major currency under pressure, as well as cable, is the Japanese yen. And my Japanese yen chart has just disappeared, just as I have to talk to you about it. Where's it gone? Japanese yen, here we are, 131 earlier today. Again, another massive high for the Japanese yen. Again, if we go to the monthly chart, remember these monthly charts, but they're significant. So here, again, look to the left, and we're way off the chart here. We're at a 20. We've been hitting 20-year highs consistently through April, but let me zoom this in a bit. You can see it takes us all the way back off the chart here to 2002. Massive candle here for March, and an even more significant, huge candle here, the monthly candle here for April. So even if we have some profit taken as we go into the close of the month tomorrow and later today, it's been a huge up month for dollar yen. This morning, the Bank of Japan continued to confirm their very accommodative policy. Suzuki, the finance minister, sort of was pushed into saying it's not great, this move in the yen, but many were talking about 130 a while ago. Many are talking about 135, 140 as well. for the yen before some serious intervention from the Bank of Japan. But again, time will tell. We've had a massive move, and it's a combination of the weak yen and the stronger dollar. So this pair has only been going in one direction for over 2 months now. And again, the main driver is the yield differential. Huge yield differentials between the United States and Japan. There doesn't seem to be anybody here today. Let's have a look. I've got no comments thus far. Let me have a look on Facebook. Oh, I can't look at Facebook here, can I? So anyway, I will keep plugging on. Looks like I might be talking to myself, but never mind. It wouldn't be the first time. Right, we've got, where are we? Yeah, 3 minutes to the news. Key news today, following the Bank of Japan this morning, will be the GDP reading from the United States. It's the second reading. They call it the advanced reading. It's the second reading. 1.1% is forecast, 6.9% last time. We'll see if that gets revised higher or lower. And then the unemployment claims. Unemployment claims way under 200,000 last week, 178,000. More evidence of the strong and tight jobs market, therefore more evidence of potential this inflation story, which we've been talking about for well over a year now. That it isn't, it wasn't going to be just a transitory issue. It always seemed a bit what's the word? A bit not naive, but hopeful that this massive injection of funds and the bounce back in sentiment in the economy was going to last of any particular length. So let's see what that data looks like in a couple of minutes. It's still a couple of minutes away. So let's just run through the main crosses. Gold again this morning. Big move down. Big move down for gold this morning, under 1875. That's the hour chart. Let me show you the daily chart. So it's been unwinding for the second half of April, gold from that rejection of 1975. So we were down to 1875 this morning. We've sort of bounced off that a wee bit earlier here under 1875, and it's rolled over yet again the last few hours as well. So gold remains under pressure to the downside. Obviously, all of this is driven by the dollar strength to the downside. That's continuing to pressure gold. Silver's the same. Oil has a few more caveats moving the oil market. We've got talk of OPEC maintaining their 400,000 barrels a day increase, and the big line in the sand remains $100 a barrel for US oil. We're currently trading at just shy of 102 at 101.58 at the moment. Oil remains relatively well bid. So you can see we've ran out of that. So now we've got the daily. We're sort of now pivoting through for this second half of April around the $100 a barrel level, which is still a very elevated and a very psychological high for the oil market. Again, any easing of the situation in the war in Ukraine, we'll see that pull down and any increase in production. But there's from OPEC and other members, but there's lots of again caveats around each of those issues. You've had problems in Libya, obviously the ongoing problems with Iran and Iraq, and obviously there's still the not political stalemate, but the arm's length relationship the US and Saudi Arabia have currently over personalities more than anything. Biden and the Crown Prince clearly not getting on. So anyway, let's have a quick recap of the data. It should be out by now. Not quite here on this terminal I've got here. So advanced GDP, yeah, it slipped quite significantly, minus 1.4% for the month. So for the quarter. Second reading is down quite significantly. It's a negative 1.4% from the 1.1%. Remember, yesterday we had that big trade balance that came through yesterday. What am I looking for? All right. Yesterday it's added to that downgrade of the GDP. That's quite a significant miss there. We should see some sort of movement in the dollar. Cooling could continue. Advanced GDP price index itself is up to 8% from 7.2%. So we've got a mixed data release. I'm not quite sure what's causing that. There must be something in the detail of that. And unemployment claims remain very, very robust again at 180,000. So let's have a look how the other currencies are moving. So the euro, let's go into the hourly chart. So we've been down, as I say here, under 104.5 this morning. Lots of profit being bagged down there, no doubt. Big move down to the key 105 level. So euro bounced on that, dollar weakening on the mixed GDP number. So sending mixed signals, basically. The shrinkage of 1.4% of the economy in the first quarter. Obviously, the impact of the war in those last 6 weeks as well. So obviously had an impact on America, as well as the trading data we saw yesterday from the lockdowns in China. So euro picking up off from this big psychological level at 105. What's going on here? Something strange is going on in our ether. Where are we? Cable again under 125. So 130 and 125 has been breached for cable. This is 1 hour. We've got the daily. See what a big weakness. Sterling in particular has come under pressure. Lots of political pressure continues to build in the UK as well. But look, as you see, these are daily candles, and we've got into our fifth, it's 5, isn't it? It's 6, isn't it? 6 consecutive days down. Day 2 and day 4 is particularly been particularly weak for sterling. So let's. Somebody's asking about gold. Imran, any particular time frame, my friend? Brooks is saying that news is out. The news is certainly out. It's a relative big miss, that, Shamir. Gold, let's go through the time frame. So here we went and rallied. Can you see that, guys? Sorry. Yeah, there we go. We can see here early in April we were having a nice little rally into the end of this support here at 1920. Remember, we talked about this level as being major support for all of March and the first week of April, 1920 level. We rallied for a week or so into the key 1975 level, over the 1950 level. We couldn't hold it. We lost over $25 in 1 day as we started to come down. We were held above the 20-day moving average for a couple of days, but then we breached that here last week. And gold here, this day here, the 22nd, that was Friday, wasn't it? And this week we've been lower again. So we've fallen out the back underneath that big support that we had for weeks in March on that break earlier in the week, following the break of the 20-day moving average. So we moved down again on Monday, and now we've been down. Pause a bit Tuesday, down Wednesday, and we're up a bit today. But that's because we've been down to spike to 1875. So Imran, the gold trend is very much to the downside here on the daily time frame. If we come down the time frames into our intraday times, our 4-hour time frame remains weak. We're in the under half of this Bollinger Band, the lower under the midline. There you go. There's a 20 period 4-hour moving average. Sorry, the 20 period moving average, the midline of the Bollinger Band on the 4-hour time frame. You see it's looping lower. So down, consolidation, down a bit weaker the last few candles, but now it's bounced this morning. I haven't got to this 1870 level, so it's up a tad. This candle is currently still got 25 minutes to completion, and it doesn't look like it's going to break over the midline of the Bollinger Band. So the 20 period moving average is going to hold, bad looks of things, so it still remains weak on the 4-hour. For the hourly traders for gold today, zoom that in a wee bit. Again, you see the move down, consolidation for a day and a half, down, drifted, quite a big significant move down yesterday. Lots of fractal highs and lows getting plotted. Continued to trend lower this morning, and then we saw that. There's that thing I was talking about before, the pitch down below 1875 to 1871, and then we've rallied since then. But again, breaching the 20 period moving average into the upper half of the Bollinger Band quite weakly, but then we touched the outer ring, the outer upper line of the Bollinger Band, but again, quite weak. If I zoom that up, you can see that a bit better, hopefully. Quite weakly, to be honest, because now we've come down and now we're consolidating. The Bollinger Band's horizontal, so waiting for some sort of direction. So we've had a fairly hefty, volatile candle this hour because of that the GDP news and the jobs news. And it's sort of biased to the upside. So it's taken that bias of the weaker dollar on that data to the upside. So what you'd like to see here is that candle that's, say, going to close in 25 minutes here as an hourly trader to close above the close of the rest of the day, give a nice day high, and it may move forward, and we may see a bit more action to the upside. It depends how much cooling of the dollar is going to take place. Remember, a lot of the news for the strength of the dollar is very, very much priced in, unless we get a major surprise next Thursday. And, central banks and the Fed in particular doesn't really do major surprises. They've telegraphed quite aggressively or quite clearly it's going to be at least 50 basis points. The issue will be what's said afterwards at their press conference, and then when the minutes come out a week or so later, what's actually in there as well, what was actually discussed about 75 basis points. But again, some hawks like Mr. Bullard have been talking openly about 75 basis point hike, getting to the break even at 2.4% as quickly as possible, and technical high at perhaps 300 basis points from here as well. So maybe more to go. However, on the downside is, we had that big spike down in second-hand car sales. Remember, it's only one data point in lots and lots of data that's caused a spike in inflation. Maybe, again, it might be just a one-off, may not continue. But the housing data we've had since the last May as well has continued to be strong and at record levels. So that's adding more pressure. The jobs numbers today, those unemployment claims, only 180,000, way below the normal economic cycle number of 220, 240,000 level. So again, that's suggesting more pressure on jobs. If productivity doesn't go up, people demanding higher wages. Workers are more productive. Higher wages doesn't actually have an inflation impact, but that story seems to keep moving forward. So gold may benefit, should have benefited more, you could argue, from the uncertainty of the war, but it hasn't. And as an end of day trader, you're still short the gold market. The 4-hour trader has been short for most of the second half of April, still remains short, maybe like testing that 20 midpoint of the Bollinger Band, but you can see it's been in that second half of the Bollinger Band since the 19th, or where was that, 18th, 19th of April, from that point of view. And the 1-hour trader sort of been biased lower, got to a key level today, and it's moved up quite nicely. So it's moved up intraday today, key candle composing itself currently as we speak. So there we go. I'm not quite talking to myself, but it's not much better than that currently. So where's Euro? So Euro's ticked up really 15 pips. It's not a great deal, is it? It's not a great deal. It's not going to affect this massive downtrend the Euro's in versus the dollar. Certainly nothing significant is now going to move. There may be some sort of more balancing of positions, but my guess is lots of positions will have been closed here at this 105 level just to take some profit off the table for the end of the week and the end of the month. But other than that, that trend remains very much intact. Miss Lagarde has got she's got a speech. It was last week she had 2 speeches on one day. She's scheduled to speak again today. No, she isn't. So, and unless the key measure of inflation for the US, as far as the Fed's concerned, is tomorrow, the PCE price indicator index chart. That's this time tomorrow, core PCE. Andrew will be with you tomorrow for that. So that number would be key. If there's a major surprise on that, either positively or negatively, we may see some sort of cooling in the dollar. If not, we should see where we go. Apparently, there's 70 of you here watching, but nobody's speaking to me. Don't be shy. Come on, who's on YouTube? Ask me a question. Ask me something we want to look at, or on Facebook, or whatever other site. What other sites are we on? At Facebook as well. So, anyway, where were we? So that's Euro down. Let's just go through them all then while we're here. I'll go through them in order. I've got them here. If nobody's asking anything, I'll go through them one. Which is the best to trade on? And which one is the best one to trade on, Peter? What does that mean? I haven't a clue what you mean by that. Which one is the best one to trade on? What do you mean? Platform, broker, which pair, which asset? When one is trading, I'll take this as a general question, Peter. When one is trading, hang on a minute, is it because I'm not? Oh, no, I am visible. It's all about the thing that suits you, Peter. So nobody knows you better than yourself. So you trade the asset, or you trade particularly trade the time frame that fits your personality. Okay. So if you need lots of trades, or feel like you need lots of trades, lots of action, you might want to look at the short, lower time frame. So something like the 5-minute or the 15-minute time frame. Obviously, the lower the time frame, the lower the target, the smaller the stop loss. So you're making more trades to add up to your pips, but you're doing lots of trades. So you might want that sort of action. An end of day trader, would have gone on this strategy. For instance, he would have gone short on, say she would have gone short here as it's moved back into the lower half of the Bollinger Band, if we're using this particular strategy. Simply because I say that because here we've got the 200-day, the 200 period moving average moving down, the 50 period moving average moving down quite nicely, and here at this point on the 4th of April, you went back under the 20 period moving average. So from a moving average point of view, they're all aligned, they're moving down. We've had a bit of a retrace for a couple of days. Now we've moved under, and it's just been tracking lower. So you're still short, basically. You would have, that was a first entry. You would have perhaps then looked for the low, the previous low, again, a structured sort of way. Remember, this was a burst out of a Bollinger Band, so you might have added to your short position on this day here. Why do I say that? Well, because we've been down for 1, 2, 3, 4, 5, 6, 7 days, and then we broke below the previous support, retraced only for 1 day, then we went lower again, and that was our new support there, 108.25 from 108.50, sideways a wee bit, but then significant candle there, suggesting it didn't want to go up, couldn't hold 108.50, and then a down day, and then a big down day there on Monday. So Friday, Monday, Tuesday, Wednesday, Thursday, unwinding, we've gone lower again. So that, continued to move lower. People have turned up. Good afternoon, everyone. Suddenly lots of people have turned up. Perhaps there was a technical hitch. Let me put it to that. Right, good morning, Caribbean, my friend. So gold will trend down for now. Well, compared to what, Caribbean, my friend? Gold, as we just said, gold has bounced today from this 1875, so it's moved up. It needs to, it's in its here on this chart, it's in its top half of the Bollinger Band, but really needs to hold and close, let's say here on this 1 hour chart, over this 1890. That would be positive for today. The 4 hour and the daily remain in downtrends. That's still a downtrend on the daily, and that's still a downtrend on the 4 hour. 4 hours needs to break. So the 4 hour traders needs to break 1896 on the on this candle, which closes at 4 o'clock, which doesn't look like it's going to do that, does it? So it remains short or weak to the downside. So yeah, the downtrend is still in place, you would argue. But caveat being that today we've tested a key level, but the more important one was here on Monday when we breached this key support, which we'd had all of March and the first week of April at this 1920 level. So that's moved down. So you're arguing what's the sort of sentiment then is, well, where's the next support? Well, if it's not where we are now, if we zoom this in on the daily time frame, we look to the left, you can see there isn't a particular key support area. The next one that attracts my eyes, just looking at this chart, would be through here. There, that resistance going up here, which is around about 1870. We've talked about 1870, I know, many times this year for the gold market. So that's the next support after this breach of 1875 today. Again, that was interesting. So that's our next daily support down at 1870. And then the next one is would clearly come in to this resistance here, which is through this day, takes you down to the 1848 level, excuse me, and then 1820 and 1800 itself. So yeah, the trend remains lower on the gold chat form. Right, we've got some questions coming in. Right, Brayron asking, hello. Will the negative growth data weigh on the dollar's bid high? Well, it's cooled it a wee bit today, but you can see here the euro. I mean, this is a massive move. Huge psychological level, 105 for the euro. Let's just use euro as the example. And we did this earlier. This level here, this 103.17, we don't get down to here until we go all the way up to the monthly chart. So if we go up to the monthly chart, you can see this next level. We look to the left, and it's the intra day, it's a monthly, remember. So the monthly low, this is as Mr. Trump had just arrived in the White House, euro dollar was all the way down here at 103.17, and everybody was talking about parity because we were within a smidge of parity. But 105 is a huge level. But as you can see on this monthly chart, I don't often talk about monthly charts, but what a massive candle this is. And again, regardless of time frame, and that's one of the beauties of technical analysis, is you can apply it to any time frame. The size of the candles matter, and look at the size of this monster here for this month for the euro. It's a big down candle, so that would suggest perhaps more pressure. 105 is very fundamental, but 103. 40, 103.20 zone as well, next key support. So yeah, euro remains to the downside. In the shorter time frame, that was a bit of a surprise, which is why we had a bit of a tick up here, Brian, on the data, but the trend remains biased to the downside, I would say, my friend. Tessa, what's the best guaranteed trading strategy you personally use with technical analysis? There's lots of words in there, Tessa, that you shouldn't be using as a trader. Okay, one is best. Okay, things don't have to be best. I understand your question. I'm just being a bit pedantic now. Guaranteed. There's no guarantee in anything we do in life. And trading strategy, you personally use with technical analysis. I'm a trend following sort of guy, and so I'm happy. My favorite indicator is probably the 20-day moving average. Lots of criticisms around it, but I don't care. That's what it is. And that's what you get with the Bollinger Band. The 20-day is default. So if we're above it, that's usually okay. If we're below it, it's usually not so okay. So here, for instance, what's this? This is the euro again. So here, it's been under its 20-day moving average, the euro dollar, Tessa, since the 4th of April, as I said earlier. And it's just, kept going down. I would have been adding volume to that as it's moved down. And then this capitulation this week, as if it's been dragged down like a huge magnet from 108.50 last week, 109 at one point, all the way down to 105. That's a massive move for euro in a weekly. I mean, it may unwind a bit tomorrow, but we've got the added emphasis of the dollar bid as we go into the end of the month as well. So this is a weekly chart now. You can see what a big week it is. So that remains the downside. And again, if that looks, well, let's take this example further. So it'd been drifting lower here on the weekly, but that was a really positive week here, the end of January. Big positive week, looked okay. The following, but it ran to a key resistance level. The following week, it moved down quite weakly. And then by the worry of the war took over by the final week of February, and it broke. All that gain it had in January was wiped out, and then we've just been moving down lower ever since. So, Tessa, there's no guarantees. There isn't a best trading strategy. My personal view is I'm a moving average guy. The blue line here is the 50-day moving average, or the 50 weekly moving average. The red line is the 200-week moving average. So this is potentially a really negative setup the 50-week crossing the 200-week moving average. If it happens this week, it doesn't look like it's going to, but that's a negative death cross on the weekly. But we may, 105 is also a big support level as well. So we could easily bounce from this level as well. But yeah, there's lots and lots of strategies, Tessa, and it isn't the strategy that's the issue. The issue is you as a trader. I've taught many strategies to many people over many years. And I've been sat in rooms where there's been 20 odd people watching the same live data as we are now, actually physically with them. And 17 will lose money, 3 will make money. Trying to follow the same strategies, because people have got poor patience, they've got poor discipline. They know the rules. They panic when they're losing. They panic when they're winning. Unfortunately, they hang on to their losing trades for far too long, and they cut their winning trades far too quickly. It's exactly the wrong thing they do. So that's why most people, end up losing money trading Forex or trading anything because they don't understand themselves. They're trading a time frame that doesn't fit them. They're trying to trade an asset they don't necessarily understand. They don't give the market the respect it deserves and treat it like a business. It's not a hobby. I said this morning to some people I was speaking to in Kenya. A hobby is quite often something you spend money on, kayaks, windsurfing, whatever it is, stamp collecting. A business is something you want to make money out of. So treat your trading career and life as a business, Tessa, sorry. So yeah, there's lots of strategies. We'll go to our website. Crossing EMA is one of the simplest to apply. The moving average Bollinger Band system set up. Some simple stochastic approaches if you want it to look for mean reverting type procedures. But find something that works for you, Tessa, my friend. John is asking about what's the reason behind the dollar showing too much strength. The principal reason, John, is it's not too much strength. Again, don't assume anything, guys. It is strong. It's been very strong. It's got stronger this week for a combination of things. Yeah, the expectation of the market is the Fed next week sort of got a bit ahead of themselves. We've got the combination of the end of the month coming up as well. So the dollar's bid there tends to be quite in bid at the end of each month. And it's I say it's not just one thing; it's a combination of things. It's principally the rally we've had in the dollar yen, for instance, is principally due with the massive yield differential between Japan and America. The rally against the euro is the uncertainty and the not clear signalling from the ECB about when and if, or not when, sorry, not if, when they might move to actually increase rates. Everybody stopped their QE, but it wasn't too long ago when they weren't expected to move at all in 2022. There've been, obviously, the situation in Ukraine has exacerbated that. The pressure on the euro, because it's the most exposed currency to the war, that's added to the weakness of the euro. So all of that just combines to, a weak currency and a strong currency. When you're trading, remember, you're looking at a pair. So one's weak, one's strong. It's only going to go in one direction. And that's what's been going on for a long time now. As I say, the 4th of April, we've been under the 20-day moving average, and we haven't looked like getting anywhere close to it since. So even if you just entered there at that trade, and even, not saying this is the way to do, but just wait till it moves back towards the 20-day moving average, you're still very, very much in the money on that move. So it's really dollar strength and weakness for all the other currencies around it. Sterling's got huge political pressures swirling around them. The economic data out of the UK is deteriorating as well, on a daily basis. The dollar remains very much bid to the upside currently. But, trends don't go on forever. They can run for a very, very long time, but don't try and catch the bottom. Don't try and assume it's going to stop just because it's got to 105 in the euro, or just because it's got to 130 for the yen. It went to 131 this morning. Is euro yen still going up, says Emax? Let's have a look. It probably should be. I don't know, based on the news there. Again, do you mean today, last week? The last 10 minutes. It's all about relative time frames as well, guys. Remember, euro. I've got a euro. Let's just sort of chart euro forex. Where is it? Euro yen. template should we use? Just get rid of that. So euro yen, 1 hour chart. Hang on, I can't see. There we are. Let's go back a bit. Right, so let's put on the. There we are, day wise. So it certainly was going up early today, Max. Max, we ran to a key level. We ran to our 200-hour moving average, popped over it for an hour. Looked like that was still going up, and then reversed quite significantly this morning. So there's a bit of a tweezer top form there. We were also over the 200-hour moving average, and we were down into it. So shorts might have been applied there. Out of the Bollinger, that's a really interesting move. That's a very strong move for the euro. Again, this is all to do with the Bank of Japan today. So that's moved up. It's ran to 137.67. That's the key resistance today. The high we've actually put in is a bit higher than that, at 138. So we did get to 138 before it turned down small earlier on today. But it's cooled now, so it's moved lower. Interestingly, it's still sort of holding that bid though, so it's had that rapid move up. So going forward today, our support sits there at the midpoint of the Bollinger Bands at 136.38. Our short-term support is the last couple of hours at 136.88. Okay, and our resistance is there at 137.68. So I don't know where you are, Emaxium. Oh, I see what you're saying now, Emaxium. I've got you now. So that's your. Let me just put that in for you. So that would be your support going forward for the rest of the day, 136.88. Resistance remains the 200-hour there at whatever that is, 137.70. So that's the range we're in at the moment. Can it hold that? We're at the lower end of that at the moment. We break out of that. Headline just come across FX Street. Houston, we have contraction. For the US, that GDP data contracting in the first quarter. So see where it goes from there, Max. I don't know if you. I don't know what time frame are you looking at that, or are you trading that one? So it's a few more questions coming in here. Eric, how does one go to the trading page? I mean, like upon touching the instrument of interest, it ends up on the chart and does not allow a sell or a buy page. Eric, I don't understand what you mean by that. What you how do you the trading page? So. Let me try and interpret what I think you're saying. I mean, upon touching the instrument of interest, it ends up on the chart and does not allow a buy or a sell. Eric, it sounds like you're brand new to trading. What I would suggest you do is go to our education page. Let me just find it here. Our education pages. hotforex.com. Well, a minute. That's the wrong site. More of that. So, Eric, are you still watching? Right, so I hope you are. So this is our contest is going on at the moment. Win a trip to Paris. So our tools, our education tools are all here. So go, Eric, it sounds like you're brand new, so you need to understand how to use the MT4 platform. So if you go to our how-to videos here, our education videos here, there's a whole list of them here, okay? So these are our little videos we have on Bloomberg every month. Forex Essentials. Eric, if you're brand new, you need to understand things like spread and leverage and pips and margin and all that sort of good stuff. What's a swap, for instance? Understand all that. But if you're struggling about using the actual MT5 platform, I'm trying to find it's here on the videos and the e-course here. So how to use the MT5, okay, and the MT4. Okay, I'll do a quick demo for you out here. So you're asking about how to trading page. So if I wanted to trade, so that's the current chart here. This is the euro yen that Emaxium was asking about before. If I wanted to trade this, there's lots of ways of doing it. So we click here on this top corner, and we get an option to buy or sell. Here's our volume, size, micro lots. I hope you can see that. 2 micro lots, 3 micro lots, whatever it is. Whatever your volume size is, but again, you need to understand your account. all about risk management, about money management before you start checking what volume you should be using and whether you're going to go long or short. Okay, so if you want to trade that, again, you can. There's lots of ways to do it. You can trade directly from there. There's no money. This is just a demo account I've got on here. So it's not popped up. But if that was this was a live market, you could trade, and that would have been your option to buy at 137.16.5. Okay. Well, that made sense. But don't risk any of your own money, Eric. Sounds like you're quite new. And make sure you're comfortable with using the platform. The beauty of MT4, and the reason it's so popular with all brokers really, is that there's lots of ways of doing the same thing. It's one of its big selling points. And it's quite intuitive. So you'll get to know how to use it that works for you, okay? Putting indicators on and all that sort of stuff as well. So the best of luck, my friend. Awonk is asking about when will the trend for euro dollar have an uptrend because it has been going down. Why worry about that, Awonk? This is one of the big things that lots of people get sucked into. Patience and discipline are the two core skills of successful traders. Having an edge, executing, all the good stuff. All good traders will have all those abilities. Be able to accept a loss is absolutely fundamental. But worrying about when a trend's going to end, Awonk, is really, something you shouldn't be worrying your head about. Where's my euro chart gone? I lost my euro chart. Where's it gone? Where's it gone? Here it is. So why worry about Awonk? Hopefully, I guess you've got short here, or you try again. That thing I said before about trying to catch a falling knife. Don't do it. It's not worth it. Okay. Have a system, trade your system, accept your losing trades. You will have a lot of losing trades. That's the nature of the business. You will have a lot of winning trades as well. That is also the nature of the business. If you can accept both those things happening, you can have a chance of coming out the other side. The problem is most people can't accept losing, or they won't accept losing. Big problem I had when I first started risking my own money. I wanted to be right all the time. And that's a flaw of my personality. I'm a bit of a big head. I want to be right all the time. I want to be able to say, I tell you now. It's a horrible, horrible trait, but that's didn't help me trade. Once I realised that is it, it's just part of me, unfortunately, we move forward. So this trend one is set. There will be some sort of buying here at 105. There's no doubt about it. I'm saying there's no doubt about that. I'm pretty sure that there will be, from what's happened in the past. But as you can see, as we've come down at key levels as well. We've stalled at 106. We didn't really stall. There's not a 106. Let me put 106. I was doing this morning again. We stalled at 106. We stalled at 107. We held here for this mid half of April around the 108 level. But it gave way quite quickly, and then it's been, this week it's unwound very, very quickly. And yes, you're right. It could. Somebody saying this. It could go back up quite quickly, but at the moment it's going down. It's a little bit. You could look at some other technical indicators. There's stocks here. It's a short, very fast-moving stocks here. The 533 is well into its oversold area. RSI 14 at 23 is into an oversold zone. So there may be, some technical reasons this may start to move up. The MACD looks a bit overstretched, but it's still very negative. It has been, look at the signal line in the MACD. It's been under the zero line. It's a very, basic indicator, but it's been under the zero line for 2 months now, all of March, all of April. So it's lipped up as we dipped up here, but it's moved down. It's moving down. So don't worry about it, okay? It will have an uptrend at some point because that's what markets do. How long and fast it runs, who knows? It doesn't matter because you just trade it accordingly. The young Redeemite, same sort of question. Is it a buy? Well, no, it isn't. Well, again, depending on the daily, it isn't. No, I can't tell you what to do. I'm not allowed to, but that trend is set. The 4 hour, is it a buy? I wouldn't say so. Would you? 1 hour? Maybe. Sort of bounce it, but not really, has it? Look at the, where are we now? We're over the hour. So that final hour, this is when the week data came out for the US. the euro moved up a tad, but it actually closed down for the hour as well. So big volatility. See the week doji candle. So it may be some sort of floor here, and we're up at the moment again. But if we go down to the 1 minute chart, using the same sort of crossing strategy, but upper and lower Bollinger Band, you could argue that's just gone long now because it's into the upper half of the Bollinger Band on the 1 minute. It's come down quite a bit and it's broken out of the Bollinger Band. It's moving up. It's testing the 200-minute moving average right as we speak now at 105.20. So as a 1 minute trader, you might have gone long here at 1603 as it just broke into the upper half of the Bollinger Band. It all depends on your time frames and your strategy, my friend. Okay, obviously these 1 minute time frames, if you'd gone long there, for instance, and again just using this trend following approach, if you'd gone long there, your stop should really be sort of down here where the market's turned, which is there. So you'd be looking for, that's your risk level. Again, your risk, ideally, only 1% of your account on that risk. It's 97 points. That's telling me. So to make 97 points, we've already done that. So, but that's only 1-to-1. 97 points times 2 is just shy of 200, isn't it? So we want to be up here somewhere at 105.14, 105.15 to make a risk reward of 1-to-2. But we've got a bit of a resistance initially at that 200 period. So the short-term scalper might have just got in here as it's broken over the 20 moving average and the upper half of the Bollinger Band and got out there as it's got to a key resistance, which is the 200-minute moving average. But you can see it's still moving up. So all about time frames, young redeemites. So all about time frames, my friend. Peter, all right, so this is the rest of your question. What did Peter say? I want to know when I should place the right trade. Peter, it's about strategies, okay? And it's the right trade for you. Not the right trade for me, not the right trade for Andrea, not the right trade for Katia. It's the right trade for you. What does your strategy and system say you should be doing, okay? Have you got a strategy? Have you got a system? Have you got a trading plan? If not, write one. Send it to me. I'm happy to have a look at it for you. So, Peter, it's all about following the plan, when to place the right trade and the time frame. Some people are happy trading these 1 minute time frames, just getting a few pips here and there intraday, close their book, they go home, they trade for an hour and they go home. Other people, they can't look at the charts all the time, or they can only look at them, they're working, or they're at university, or they're doing another job, or got a life outside of trading. And so they just look at the end of the day. So if this was my end of day trade and it had triggered on the 4th of April, I've got nothing to get too worried about it going against me thus far, have I? I might be thinking, well, it's finally got to 105. It's the end of the month. It's Thursday. I might take some profit off the table. I might have done that on Friday as well, as it went down again to this under this 108 level here. But we've had a right old week, haven't we? So I certainly wouldn't have closed my trade out here on Friday, for instance, because it really just gone sideways last week. But the big move was on Monday as it followed through to the downside. So the trend remains short. So it's all about timeframes, Peter, and finding what works for you. Watch, again, if we... where's what Forex gone? If we... oil, somebody saying, have you seen oil? I haven't seen oil. Oil was... there might be some news on oil. Doesn't look like there's a lot going on here on the daily time frame. Let's have a look. 1 hour. There might be some news. It's bounced. It's really sideways. Dollar. Here for... Sorry, Peter. I hope I've answered your question, okay? Let me do this oil question from Facebook. Oil, what day is it? Thursday. Inventory yesterday. Daily. Really, oil. I think I said this earlier when there was not many people here. It's still bid to the upside. And what impact will the PCE and the GDP have in the coming weeks? Well, the markets at the moment, certainly today, have been dominated by Forex, which we haven't been able to say that for a long time, driven by the Bank of Japan. So we've got the Bank of Japan today, we've got the Fed next week. and all the other central banks playing their key role in this inflationary outlook. But as far as oil is concerned, it's got a big psychological support at $100 a barrel. $100 a barrel is very elevated historically for the oil market. And it hasn't really been moving much since, has it? We've had conflicting information moving the oil market. We've got the story of a slowing global economy. We've got Japan going into a sort of rolling series of lockdowns. Remember, Shanghai, 25 million people locked down for 3 weeks, and it got worse. Different regions, zones of China also in lockdown. Panic buying in Beijing earlier in the week. So all of that, China, a big oil importer, big oil producer as well, don't forget. But sideways actually held at $100 a barrel. So really, there's not a lot of trend-moving activity in the oil market, to be honest, on that daily time frame. We got major support at $100 and not a lot, to be honest. We might the OPEC meetings are, I think, next week, aren't they? I think that may have some sort of direction. But the rumours are, remember, OPEC from a news point of view leaks like a sieve, and there's no real significant news announcements come out of OPEC because it all leaks out before or during meetings that are going on. So $100 is the big support here, which we've held for all of March, all of April. We got as high as 103. Well, this is 1 hour. I'm talking nonsense there. What I'm talking about. The $100. It's pivoted, not held, but it's pivoted through that level for all of April. But we didn't get to that, 125 level panic we got at the beginning of March after the invasion of Ukraine. So it's it's not doing anything. So I'd stay out of that as an end of day trader. A 4-hour trader, again, not a great deal going on. We've got big support at $100. 4-hour traders, we haven't closed over 102.75. So there's the range. Recently, we've got our two fractal lows there, fractal high there. We should be getting a fractal high here again from the last 3 candles that continues down there. So that's the range for 4-hour traders. 1-hour traders, again, there's our 4-hour range, the 2 yellow lines. You see more fractal highs and fractal lows in there. It may tick up to 102.75, but it needs to break over that. And again, can you see how the Bollinger Bands are just sort of sliding sideways? The moving averages are flat, not a lot going on this week in the oil market. Maybe more news next week in oil. So that's there. Carries it. Great, that's no problem. Ideal. I'm holding a position buy for pound yen floating. The guppy has been all over the place. We rallied really, really strongly at the first 3 weeks of April. We went to 168 intraday. End of day, I think we actually closed over 168. No, we didn't. We got close to 167.50 on an end of day basis, but we did get over 168 intraday. Since then, it's turned around. It's turned around really aggressively. It's to do with the weakening sterling more than the stronger yen, to be honest, because yen's been clobbered across the board. But we went down from 167.50 all the way down to 160 very, very quickly on Tuesday. Wednesday, we turned around. We found support at 160. Big round number again. See how that supports coming from that resistance up here. Big down candles Friday, Monday, Tuesday, and a relatively significant bounce today, and that's to do with the continued soft accommodative guidance from the Bank of Japan. But pound yen remains here on an end of day basis. Obviously, can't use today's candle because it's not complete, but this is when the news came out. So the guppy, pound yen would need to break 163.40 for this to move back into the upper half of the Bollinger Band. At the moment, it's had a big, strong rally from the lows at 151 at the beginning of March to this highs at 168 at the middle of April. and now we're sort of just breaking that. So again, if we use didn't this today, let's stick a little. I've got a little. Where's my Fibonacci chart on here? A big rally up. So a big round number 160. We found that support and it's moving up. So next dotted line through there is that fractal hive, which takes us back to the 28th of March. So if we break and hold the into the top half of the Bollinger Band, your next target will be 64.60, and then the April high up here around about 67.50 if that reverses again. So I don't know what you're saying. You're holding a buy position for you. Again, a deal. I don't know what time frame, but yesterday and today it's been quite strong. So daily remains weak. The 4 hour will be in its the 4 hour here broke into the upper half of the Bollinger Band early this morning following the Bank of Japan, but again it's topped out there. It's at 164.12 and it's turned lower. So the 4 hour has support. The 20 period is there at 161.88. This is what these ones on here. This is the 5 and is that the 9? The yellow's 9. Yeah. So it's got a bit of support. The 5 hour moving average. Or 5 period moving average here. It's 4 hours, isn't it? Around about 162.60. But that move up has been reversed quite quickly as well. So that may be looking to move down. But the higher time rates remain certainly to the downside here. You can see on that 4 hour. And the 1 hour will be a bit more bullish. Is this morning's news. So we consolidated yesterday, broke out the range this morning. Again, classic little break there this morning at the 3 o'clock candle, and it just rallied really nicely into our day high at 164.25, and then it's reversed this afternoon quite significantly, but still bid because it's still in the upper half of the Bollinger Band. The 20-hour support is there at 162.17, so sort of cooling at the moment, the guppy to the downside. Do you think gold will continue to sell? It looks that way, Pule. As we said earlier, it's down. It has to be. I say the caveat is that it's already touched this 1870 level, which was sort of pulling it down on an intraday basis. So it may have an update today. It's looking quite indifferent, isn't it? But remains to the downside. Gold. Alok, I should say, please taught me Hindi. I'm not a Hindi speaker. I have a colleague who can speak Hindi to you, Alok, if you're interested, Pandy. I can get him to get in contact with you. Let me take your name. We can do. And we have, certainly on support desk, we've got Hindi-speaking colleagues, Alok. So, the best of luck, my friend. Where are we? Which pair is he talking about? I don't know, Shabu. You gotta, Shabu, when you need to check. I mean, the screen's not great, is it? But this little here, that is what the logo is. This is gold. This is the gold chart. It's the daily basis. Sorry, I should tell you. It's the daily basis, and the daily basis is weak because it's under it's in the lower half of the Bollinger Band. It's broke below that key 1920 level. And it's tested 1870s level. So that's gold, Shabu. Sorry about that, my friend. How can I trade in Kiwi? Oh, you don't mean Kiwi, do you? KWD. What's KWD? Can't remember off the top of my head. Is that Q8 dinars? Get it? I think it is, isn't it? Most brokers will only accept the major currencies, but you can deposit in the. I think it's Q80 dinars. Andre's looked it up for me. Yes, it is Q80 dinars. And I mean, a lot of the Middle Eastern dinars, Gulf state dinars. They're usually brokers normally want euro, dollar. Some brokers might offer that Jadea, but it's not a major currency. Remember, so. Obviously, transferring your dinars to dollars. I can't remember if it's a fixed rate they're having Q8. But at the moment, obviously, you wouldn't get a great rate. So patience, Lindsay. Basically, wait till it comes back a bit. The rally in the dollar isn't going to go. The rally in the dollar isn't going to go on forever. We don't know when forever is going to stop. However, let me give you a little caveat. History shows. When the Fed actually kick off their rate hiking season they start getting going, the dollar tends to cool. Okay, that's what's happened in the last, over many years, rate hike cycles. Is the dollar starts to cool once the Fed start increasing interest rates. So it's the anticipation more than anything that moves markets. So in a couple of months, keep the Q80 dollar may have come back around, my friend. Okay, Emma. Maxium, 137, 17 euro yen. Very good. Absolutely no problem. That's what we're here for. That's why you're here. No, thanks a lot. I appreciate it. I appreciate you being here as well. You've got lots of other things to do, but I appreciate you being here. Sis is asking about, I need advice with my strategies. Could you help me with that? Of course. Of course. Sis, let's go through this. Do you know the time frame that's best for you? Okay. Do you know? Have you understand? Have you done the basics? Do you know what leverage is? Do you know what margin is? Do you know how it'll affect your account? Do you know how much money you've deposited in your trading account? Do you understand that you may lose all of that? Are you comfortable with that? Are you comfortable with losing money? You've got to be. Less, your subconscious, your brain will beat you up, and it will affect your decision making. As far as strategies are concerned, Sis, which is your particular question, there's hundreds of strategies, thousands of strategies, and most of them work, and they work well enough. You could make money from a lot of them. Okay, there's a lot of scams and there's a lot of nonsense out there as well. The reason I say a lot of strategies will work and work well enough is that the problem is your application of the strategy. Okay. This, for instance, what's on the screen here at the moment is the crossing EMA strategy at the moment. This happens to be euro. Sorry, it happens to be gold on the 1 hour time frame. So you've got to understand what the strategy is. This is a trend following strategy. If there isn't a trend, if the market isn't going in a direction, either up or down, there isn't a trend. So trend following strategies won't work. That's why here during March here, this first, second, third week of March, we just went sideways and it wasn't trending. So trend following strategies are no good. The moving averages are flat. Here we had the green line here, which is the 5 crossing under the 9. So it was suggesting it was weak. That would have been a sell signal on this at this point here. We didn't know this was going to happen, did we? So at this point here, this particular strategy, where are we? The 15th of March is signaled short. It went short the following day and went down as, I don't know, you were, whatever it was, you'd got short there at 1917 and it went as low as 1895 the following day, but then it sort of reversed, didn't it? So, and then it was stopped out here. So that would have been a losing trade. Then it looked like it was going to go long. It didn't. It reversed again, so that would have been a losing trade. Then it didn't do anything because it's flat. And then here, it's triggered long here on the 8th of April. And you've had a nice, decent run there up to a key level, 1975, bagged some pips. And then it triggered short again, gold, here on the 22nd of April. And you're still short here because it's going down, okay? So it's all about the time frame, Sis. And the strategy, that strategy would have worked. We'd have made some pips on this. We'd have made some losing pips on here. And we would have certainly in the money currently. And you would still be in this trade, this very simple crossing EMA strategy. And this is gold on the daily time frame. And it's not even trending particularly. Okay. If we go back to, the dollar index, for instance, on the daily time frame with the same crossing strategy here, if you zoom this up, the dollar index has been long here from this big breakout. The last long signal here on the daily time frame using this same crossing strategy. So here we're above the 20-day. So the dollar index here went long here the 4th of April, and it's been long ever since. And you're still in that trade because it hasn't reversed and stopped out here. So again, it's that. So that's the 5. Sorry, the green line here is the 5 period moving average. The yellow line is the 9 period moving average. And here we're using it with the Bollinger Bands. We normally use it with a 21 EMA, but we're using it with the Bollinger Bands on this particular setup. And the midline of the Bollinger Band gives you the 20 period moving average. So there's your 3 moving averages. They're all nicely aligned. We've got that nice angle moving up. and it's trending away. But as you can see here, when it was flat, it's not great. So you need trending markets for trending indicators. When you're going sideways here, you need oscillators to be able to capture the reversion back to the mean. So here during this level here, where it couldn't get over 99.25, this particular chart. And again, I said this morning to some people I was talking to in Kenya. The beauty of technical analysis is it works on all time frames and on all assets. Okay, so here you can see for this most of March. What am I talking about? Yes, most of March, after the worry of the invasion, it rallied up the dollar index to 99.25. It then sort of oscillated from the top to the bottom. But as you can see here, what the fractal highs here are giving us there's our top. So if you were using this, you can see it's not trending. So you'd be wanting to go short when it got to the top of the channel and long when it got to the bottom of the channel. And the fractal highs and lows are helping you with that channel. And then, again, you suddenly saw here, that's the first sign of strength here on the 4th of April. But the 5th of April was even more significant because the moving average were nicely aligned, and we'd broken out of the channel we'd been in, didn't we? We'd broken up above these fractal highs, the channel we'd been in for all of March. And obviously we didn't know this was going to happen, but we were long at this point, and we're still long, because it hasn't closed below the 9-period moving average, the middle moving average, is one way of using this particular strategy, sis. And also, even if you were trailing your stop loss up, your stop loss would have been there, it gone up. You might have moved it here and got stopped out there, but that's broken higher again. So you'd have got back in here last week, and it's just continued to move higher. So at the moment, you're long from here on the 4th of. In fact, technically, it would have triggered long here on the 4th of April, and your stop loss would either be here, the 9-period moving average, which is around about 3 candles back from where we are now, so the 101.85 sort of level. So it's not the strategy, sis. It's your application of it, okay? And the time frame you want to trade and the asset you want to trade. So there's no rush. Get the basics right. Make sure you understand things like the spread, the leverage, and the margin. I say it all the time. Understand yourself. Understand your management. Understand the volumes that you're trading. If you're new, keep it to the minimum lot size. 001 gets you started, gets you government. Because the key thing about trading is not making money; it's hanging on to it. It's consistency of thought process, consistency of not adapting your strategy, but following your strategy, sticking to your strategy, sticking to your plan. Most people can't do it and don't do it. They fiddle with their strategy, they fiddle with their plan, they think it's not good enough, they risk too much principally, and that's why they get it wrong, and they blow their accounts and they think they can't do it. Anybody can trade. It's not an intelligence thing, it's an emotional intelligence thing. All successful traders have. They understand themselves and they understand the markets they're trading, and they have their edge and they trade it accordingly. So anyway, enough on that. Lincoln, good morning. Oh, yeah, good morning. Good afternoon. I've been studying and trading for this is an interesting one from Mercy. I've been studying and trading for 5 years now. Have still not got a lead on it. Okay, Mercy. Well, hopefully 5 years is a long time. That's 60 months. So hopefully you've got 60 months worth of data, have you? You've got 60 months worth of understanding yourself. So tell me, email me at webinars@hotforex.com is probably the quickest way to get hold of Mercy. I'm being serious now. Webinars@hotforex.com is the quickest way to get hold of me. Because if you've been doing this for 5 years and you still haven't managed to move forward, there's something fundamental you're doing wrong. You're either risking, I'm guessing, but you haven't learned from your losing trades. You're perhaps too emotional, no patience, no discipline. You haven't studied the markets. Your leverage is too big for your account. You haven't invested enough. There's lots of things can go wrong, Mercy, unfortunately. And we've all been there. It's not a downer. And, for you to actually sit there and write this, and for you to be happy for me to, broadcast it publicly, that's a massive psychological step forward for you. I don't know if you've done this before with anybody else, but that is a big, big step forward because you've actually opened up to say, I can't do this. This isn't working for me. So let's find out what's going wrong. Okay. You'll be doing a few of those things, if not all of those things I've just mentioned, because we all do. Okay, don't worry about it. It's nothing to be worried about, but we can move forward. Email me webinars@hotforex.com and we'll have a look at your plan. I hope you've got a trading plan you can share with me. I hope you've got a strategy you can share with me. I hope you've got some idea of your emotional intelligence, your attitude to risk, how patient you are, how disciplined you are, all that sort of stuff. Are you trading, the wrong time frames, the wrong assets? Let's have a look, my friend. I'm happy to help. That's what we're here for. Cosmos, I'm really trying to understand fundamental analysis. Could you help me a bit, sir? Fundamental analysis is what it says. We've got webinars on it, basically. It's perhaps more appropriate to understand a little bit about economics. Understanding it's perhaps more appropriate to stock market investing as well, because the fundamentals are quite clear there when you're looking at stocks. How have they performed? What's their EPS, their earnings per share? What's their revenue, their sales? What's their management style like? What's their quality of their management like? What products are they in? Are they in a growing sector, a shrinking sector? All that sort of stuff. But as far as like the economic data, when you talk about fundamental analysis, it's those things like GDP, like we've had today, unemployment, employment data, inflation data is the big hot topic at the moment, isn't it? So you don't need a degree in economics to understand those sort of fundamentals, but a basic grasp of how they impact markets is helpful, certainly. But as I say, watch some of our webinars on fundamental analysis, and if that's the way you want to go, Cosmos, again, email me at webinars@hotforex.com. We can have a chat. Okay. Hello, my friend. The very best of greetings, and my heart goes out to you if you are indeed in Ukraine. And stay safe, my friend. Can you look at the pound, guppy, weekly and monthly chart? I certainly can, Tulani. That's the sort of question I like. Look at the specific asset-specific time frames. I think from what I can remember, I think this is still weak, I would argue. So the weekly, let's have a look at the weekly. Weekly on the guppy. Well, Tulani, you tell me, my friend. Is that strong or is that weak? Let's just clear all these some of these lines off because it's a weekly indicator list. Let's clear some of these. There we go. Let's tidy up a wee bit. So the weekly chart that remains big, doesn't it? I hope you're with me. That's had very, very strong move. You can see that sort of breakout again we've been talking about before here. So this going back to the middle of March, we've broken out significantly, haven't we? There's my horizontal line. So we've broken out at that 157 level for the guppy here. So it was a resistance here back in October. We ran to it at the beginning of the year. Nice rally here into the end of the year for the guppy pound. Ran into that 157 level and then moved down. Couldn't get over it. So we've got three fractal highs here as we run into it again here on the 18th of the week of the 18th of March, and then break through it the following week very, very significantly. So we've had 4 or 5 strong weeks. However, and I guess your point. Last week, look at that one. That's a big shooting star here on the weekly time frame. So we went to that level we talked about earlier, that 168 level. And for the weekly candle, that's a big negative shooting star candle. So we may have run out of steam quite soon. So that looks like that may have rolled over. However, we are still very much on the bid. The 20-week moving average is all the way down there at that resistance of 157. That's the midpoint of our Bollinger Band. And even our 5-week and our 9-week moving average is still supported. So we're right on that at the moment at 162.50. So a close on that or above that tomorrow remains bullish, Tulani. But that still remains bullish even though we've come down this week. So the weekly chart is still to the upside. So you're still with the trend if you're going long. And as far as the higher time frame, which is what you asked about, Tulani, the monthly, that also remains bid. So here on the monthly chart, let's look at this. Look at this. So remember, this is monthly, 4 and 5 week charts, action, weeks worth of action in each candle. So when did we last move into the upper half of the Bollinger Bands on the monthly? Well, it's all the way back here in November 2020. So that's been bid, if you like, since November 2020. So pound has been up for all of 2021 and so far all of 2022. Way over it. So the 20-week is all the way down there at 151. Again, it's broken out of a range there. There's a 157 on the weekly. The monthly range break was a bit lower down here at probably 155. Yeah, 156. In fact, that's interesting. That's quite interesting. So that, my friend, on these higher time frame, that becomes your big supply zone here. So we've broken through that very, very significantly. So 157, 156.20. I'll call it 700 pips. Call it 156.7, 156 is a big support zone on the monthly chart, and 168 is our upside target. If we zoom in, you can see we were last up here at 168 April 2022. Takes us all the way back to what's that? That's January 2016, isn't it? January 2016 or February 2016. We were last up at these levels. February 2016, when Boris Johnson decided he was going to join the Vote Leave campaign, and sterling collapsed. Anyway, that's a story and a half. So monthly chart is bid, and the weekly chart remains bid. Although there's a shooting star last week on the weekly chart, Fulani. So we need to close round about where we are now, 162.50, I'd say, for the weekly to remain strong. Hope that's set. Best settings for the Bollinger Bands, ask Naish. Well, John Bollinger invented Bollinger Bands, and John Bollinger says 2 and 20. Most of the world use 2 and 20, so why try and change it? 2 and 20 is the default. There's lots of ways of playing it. Some people play with it. They want to get ahead, so they'll bring the standard deviation down to 1.95 or 1.9 to try and get ahead of the crowd. Others will go to the other extreme and change the standard deviations to 3 on the assumption that if it. Let's look at this. I'm assuming this is object list. No, I didn't want object list. I wanted indicator list, didn't I? There we are, indicator list. Bollinger Band. So there we go. We can see that this is default setting, so 20 count back and 2 standard deviations. I was just about to say about 3 standard deviations. Some people I know use 3 standard deviations and use that as a go-to either target or definite turn. It doesn't mean it's going to turn. Quite often when you're 3 standard deviations away from the norm, it can keep on going. So here, for instance, even though that wouldn't have worked out, would it? This is the weekly for the pound yen, and it went more than 3 standard deviations away from the norm, and it still kept going up the 2 following weeks, didn't it? So that wouldn't have worked. But yeah, 2 and 20, Naish, that's what most people use the Bollinger Bands for. But again, play with it if you want to. But remember what the Bollinger Bands are showing you. There's lots and lots of information in the Bollinger Bands. I quite like the squeeze where you get the let's zoom this up, where you get the lower Bollinger Band coming up. Oh, you can't see that now. I've zoomed in too far. The lower Bollinger Band's coming up, dipping up here, which it did a bit there, and the upper Bollinger Band coming in, so get a squeeze, and then there's usually a big eruption, increase in volatility, which you've got here. The baby bird's mouth is quite often how it's described. Here we've gone sideways, so there's not a lot going on. Again, so it's a moving average. The midline is flat. Here we're in the upper half of the Bollinger Band. We're trending high, so that's positive. All this way we've gone side. We've remained more or less in the upper half. So the bias is to the upside. It's taken a long time for that to break out, hasn't it? This is weekly time frame, but all that time there. Most of 2021 and 2020 before we broke out of that 57. So, there we go. Stephen, I'm not in the market of predicting things about predictions for tomorrow. No, is the short answer. I let them again. React, don't predict. See what happens today. Nobody was we were expecting a bit of a slowdown in the US GDP, but for it to turn to a contraction, you'd have thought, well, that dollar's going to get hit, or on that news. But I don't know, either we had a bit of a hiccup in the downtrend. We ticked up in the last couple of hours, but this is sterling against dollar. It still remains weak. So try not to predict, Stephen. That was going down. Quite a lot of volatility, obviously, in the last hour as that news has come out. But we're still biased lower, aren't we? So try not to predict. The key data tomorrow, if you're trading tomorrow, Friday, is that PCE data from the United States at 3:30 server time, 12:30 GMT. We've also got monthly GDP from Canada. That's not much, but significantly less significant. And also the personal income, personal spending numbers as well for the US. So key data tomorrow, 12:30. But remember also, guys, it's the last trading day of the month as well as the last trading day of the week. So there'll be a lot of wash up going on, if not now. Sometimes on the back of that data. We've got inflation data out of Europe as well tomorrow. So 7.5%. As it got even hotter, that might be a bit of a surprise. So that's not going to help the euro at all, is it? Well, it might if it's really strong. It might push. The ECB have to act quicker, turn a bit more hawkish, more publicly hawkish, and that might see a renaissance in the euro downtrend. So data dependent as always. Terry, no problem, my friend. Hang on a minute. What's this? I've got a star on that for some reason. Naish, good explanation. Thank you. It's not a problem. That's what I'm here for, my friend. Sis, thank you. I think my stop loss setting is off. I would enter a trade and get stopped out before the trade goes in my direction. But I think I might need to control my emotions as well and think again. Thank you. Absolutely, sis. That's absolutely correct. Your stop loss, again, I'm a trend following sort of guy. So the stop loss, it sounds like a horrible thing to say, but the stop loss has to be where the stop loss has to be. If you're a trend following trader and the trend has changed from up to down, where's the turn of the trend? And just using this chart here we've got in front of us, where's the turn of the trend in this particular market? It was last week, wasn't it? It was this fractal high here, the top of the Bollinger Band here on this particular chart. So that's the turn, isn't it? Okay. This particular strategy would have very weak entry the following day, and obviously that 3 day we didn't know that was going to turn, but it's a resistance area. So 125.70 would have been your again. I'm just using this as an example. And you would have got in there. So that's just that would have been your entry here, and that's your stop loss. So that's what you want to be. Again, I don't know what time frame you're trading, but that would have been 370 points. It's quite a big one, but there's the following day we did 250 points. The 370 was done within a day, so you're definitely your risk reward is in, but if you're looking at 1 to 2, even with a big stop loss like that, the 700 points was done on that third day as it's moved down. So you're very much in the money there. So careful with stop loss about putting a fixed pip stop loss, because unless you know the asset you're trading very, very clearly, because a 10 pip move on something like the cable pound dollar is very, very, very different to a 10 pip move on the pound yen. The pound yen has a much bigger, higher, I haven't actually got this on here, average true range. That's i.e. how far it moves typically. So let me just show you as an example of that. So if we insert the indicator, the average ADR is my average true range one. Okay. So let's just use this as an example. So the pound yen currently today has an average true range of, i.e. that is how many pips it's moved on average over the last 14 days. That's what the ATR shows you, is 1.975. So 1.975, okay? So that's how far it typically moves on a day. So 1.975. Compare that to, what did we talk about? Compare that to sterling against the dollar, the cable rate. We insert the aperture range for that. That is compared to a much lower. Oops. I remember it's still got the pound in there, but it's about two different. So that's .0033. So it's it moves around pip wise much less than there we go. Let's put it on there. There we go. Much less than the yen, the pound yen. Where's my pound yen? There we go. Let's just put those two together. Sorry, next. Okay. So that might be a thing. Don't get suckered into fixed pips stop losses just because it's very different from the assets. Let the market tell you where your stop loss should be. Okay. So for instance, this looks like it's found some support. So if you're going to go long on this chart here, you stop the turn, this big move down may or may not be over. It looks like it probably is. Your stop loss needs to be really below that level because it could easily go at that level, couldn't it? And then if you got in today, I don't see, that's when you need to get your risk reward correct. Okay, is that too big? Can you take that trade if you're only going to risk 1 or 2% of your chart? Okay. So thank you as well, sis. Sorry, just came in. If you still have time, I'm doing what? Gold. I'm a bit bored with gold depot, my friend. But as I was saying earlier, it's not doing very much. The big action was earlier on when we. This is the daily time frame, so it's biased to the downside. So the higher time frame on the daily is down. So if you're going to go short, you're with the higher time frame. The 4-hour remains down because it hasn't got over that into the upper half of the Bollinger Band, so that remains weak. We need to, as I said before, we need to break 1896. I think it is 1895. Then, for the sake of splitting hairs, intraday, the 1 hour did get a bit perky, and the key thing today is that we've been down to test under 1875. So we tested lower intraday. 1872 was the low for the day. Then we looked like we were ticking up, but it hasn't broken higher. So the hourly chart needs to break over 1890 if it's going to go higher. And it doesn't look like it's going to do that. Oh, it might do, obviously. Gosh, how late it was, 10 to 5. If we're going to move to the upside. So that not a lot's going on, to be honest, Depot. I don't know what time frame you're trading it, but it's in the lower time frame. So anything under the hour, it's sort of bid. Now, I'm not saying it is. So your support, I would say, intraday, you might want to have it sort of below the main data of the day, which is there at 1881.87. So if you're going to trade this on lower time frames, say the 15-minute chart, that's your support for the rest of the day. You need to break anything over 1890 is positive, but that's where you want to be placed. That's where 15-minute traders today, as you can see, have been placing shorts. So you might want it to go short there. If we go down to the 5-minute, there's that, bang, down. Bang, didn't work out. Big move down there. Here we are going into it, 5-minute, maybe. But 5-minute, he would have gone short there. It didn't work out. And again, using his crossing strategy, same old syndom. So he'd gone long there 10 minutes ago. His stop loss would have been down here, turning the market. So it's process. Or whatever time frame, whatever product you're trading, whatever strategy you're trading, all about process. So just keep doing the same thing all the time. Accept that you lose. Nobody, here, for instance, you're a 5-minute trader on the gold market. You were nicely short here, weren't you? Nice. And then all of a sudden, bang! News comes out. GDP, US contraction, dollar weakened. And bang. So obviously, if you're trading these short time frames, as I say, make sure you have the calendar, make sure you know when the news is coming out. So all that, a good trend moving down here was wiped out on the news. Strong jobs, 180,000. US GDP contracted by 1.5% in the first quarter. Gold leapt up and then it dipped and it's trying to move back up again now. Anyway, so all about process, Depot, my friend. Whatever it is you're trading. Sysnax, I would consider you not use. Solana, be careful about not using a stop loss. Unless you're very strong psychologically, you can accept that you're going to get out. Most people who don't place an actual stop loss never get out at the stop loss they say they're going to get out at. That's all I'm saying. Most successful traders trade with a stop loss and they trade with a target. They accept they will lose, and they know when they lose, they're only going to lose a smaller percentage of their account. That's why they're still in business, Thalani. That's been my only comment on that. If it works for you, my friend, it works for you. Just trust yourself, okay? It's a big ask, that, Thalani. I don't know how much experience Sis has, but I would say from the questions she's been asking, I would guess she's a bit nervous, been in the market, lost some money, been stopped out, and is quite uncomfortable. So it's a big ask to say to her, I'm saying her, I'm assuming she's a her, to trust herself. So, but yeah, nothing wrong with trusting yourself, Lani. I hope you're doing well, my friend, as well. So anyway, that's the last question I think I've got today. Nobody else from Facebook. And I've been here for far too long. It's 10 to 5. I'm going to go and wish you all a safe evening. Thank you for your time. Unless there's one final few questions about anything. Thalani, I'd like to have a longer conversation with you, my friend. If you're a non-stop losser, you're a successful trader without using a stop loss, that's quite interesting. I say, I talked about people emailing me. Feel free, anybody that's here, email us at webinars@hotforex.com. You've got any trading questions about anything, we're here to help, okay? And it sounds a bit impersonal, webinars@hotforex.com, but it's the quickest way to get hold of us. And our support guys monitor it 24 hours a day, even when we're not here. So they'll get it and pass it to us. But I check it as well. I'll check it now before I go tonight. So thank you, everybody. Stay safe and good trading. Come and join us tomorrow. Andrew will be here tomorrow when we are looking at one of the key data points of the week. To be honest, it's that PCE price index tomorrow. So same time tomorrow with Andrea as we close out the week and more importantly the month. So take care, everyone. Stay safe, and we'll see you soon. All the best. Bye-bye.